Well, the markets are not anticipating a huge amount of adjustments here going towards this monthly USDA report. On the wheat side of things here, exports have been kind of along as expected at this point. Shipments kind of the same. The big news in that area, of course, is what's going on in Ukraine and the tensions there, but I don't sense that that has any short-term impact on the USDA's adjustments here for the for the March crop report. Part of that's because of the fact that we're going to be looking towards the end of the month here when we have our next stocks reports, which will give us an update on the feed demand issues for this last winter quarter, and so the USDA probably will not make many adjustments there. A similar thought was kind of coming into this particular report for corn. Corn has, though, has had some very, very strong exports here over the last month. We did about 110 million sales, and since actually the January USDA's final production report, we've done over 300 million of additional sales for this year. It really puts the USDA in kind of a bind here to really increase that number. They actually increased it last month by 150 million bushels, but the trade's kind of looking for a little bit of a rise here on an overall basis because there's expectations of this year's hog virus issues that have possibly reduced the supply there. And as we know, right now we're at record high prices in hogs, that there's a chance that the feed demand might be down at the quarterly stocks report at the end of the month. But I kind of feel like the USDA might still increase their export number 50 to 100 million, maybe as high as 150 million this month.
Well, unlike corn and wheat, we do expect some changes in the soybean estimates, and mostly on the domestic side, which would then spill over into the international side. Widespread expectations have been held for months around here. The USDA really has to take their ending stocks estimates for for the United States soybeans below 150 million bushels. Something they haven't done yet. Last month they avoided making that move by reducing the residual demand and transferring that to the export and domestic demand. And they still have a little bit of space to do that sort of thing again. So you could see some of that happen again this month. They still have, I think, about 12 million bushels left to go with the residual demand. And they can switch all that and give you basically a zero residual demand and continue to shift those 12 million bushels over to the domestic and to the export side. But the export pace running very, very strong, well above last year, well above the 5-year averages, and well above what USDA estimated for the total year. So basically we really can't export anything more and have USDA stick with the present estimates that they have. So widespread expectations, justifiably so, that we need to see the export demand increase, at least 5 to 10 million bushels more than likely. Domestic demand might be a little bit harder to identify. They might be a little bit more justified in leaving that alone. Our soybean meal demand, soybean meal prices have been very, very strong because of demand, but we do have less hog numbers, and that's going to be a feature as we move into the next few months, especially with the PED virus causing all the deaths of all those pigs, like 4 million, I guess, I saw last week. And that might be enough to kill off the soybean meal demand to the point where USDA feels justified in leaving the ending stocks estimates alone. Or the demand side alone for the domestic side. Worldwide, we'll keep a very close eye on what's going on down in Brazil and Argentina. Crop production estimates dropping by the day, really, for the Brazilians, and that might start to stabilize. My best estimator down there thinks that the crop's going to be between 88 and 90 million tons now. He was thinking it was going to be 93 million before this dry weather hit. And I know that most of the trade estimates here in Chicago seem to be a little bit below that, maybe in the range closer to 86 to 88 or 86 to 90. So I think Generally, though, it's been my experience that the market tends to overshoot losses just as in good years they tend to overshoot production quite generally. Not always, but generally. For Argentine soybeans, the average crop, the average estimate I have is 53.5 million tons. I saw the Bolsa de Buenos Aires came out with a 54 million ton estimate here today. And I think that that would probably be a pretty good estimate, and USDA would probably be justified in leaving their Argentine estimate alone, and probably will not be so interested in cutting the Brazilian production estimate quite as much as the trade here would generally expect. But overall, because of the potential for reductions in ending stocks estimates here in the United States, a lot of ideas that you'll see that transfer right down to the bottom line, right down to the world estimates as well. So looking for reduced world ending stocks estimates to about 71.5 million tons. Some of that kind of spilling out from the losses down in Brazil as well, but a lot of that for here. As to whether we'll actually see USDA reduce the ending stocks estimates this month for the domestic side, that's really kind of up in the air. That they over the years they've really felt 150 million bushels is kind of a pipeline number for them. So they're going to look very, very hard at how they can massage the demand side before they make that drastic cut this early in the marketing year.